Good morning and welcome, Patriot Radio News Hour. Joe and Jason live on this Thursday. Our toll-free number, 800-951-0592, the physical delivery of wealth insurance. Right? Where can you put your money that you don't have to worry about it? Well, I got the easiest answer of them all. Gold and silver. The website, allamericangold.com. And Jason, it's back again. More banking problems, more deposits continuing to leave. PacWest has lost 10% of their depositors this week alone. We'll continue to monitor. Listen, you already know. You know. And all of you out there, a lot of you, you're putting your gold and your silver away, but we got so many that haven't done it yet. What are you waiting for? Take the time, do it. It's so easy. It's not complicated. And I get it, because the media people, right, the stock channels, listen, what do we got? We got Fox. We got CNBC. We've got Bloomberg. Heck, they got stock channels. They got Bloomberg Asia and Market Watch Asia. I mean, just at my house, I think I've got 4 or 5 different channels that tell you stocks, and make you think that gold is difficult. It's complicated. It's hard to understand. Man, it's a barbaric relic. And here's the real issue. You know why you need 4 or 5 channels for all this, the stock market and the debt market? Because that's what's complicated. Matter of fact, the thing that's the least complicated is putting gold and silver away. And here's the best part. Put it right where you know where it is. And store it right at your house. You go out, 3 million, and maybe, it may even be 4 million by now, ounces of gold can fit in a shoebox. That's how easy it is. And, it's one of those things, Jason, where I always laugh, where people are like, oh, well, I don't know, it's complicated, or my financial advisor tells me I'm crazy, or all of these other things. And you know what the crazy part is? The crazy part is people that go out and lose 20, 30, 40% of their money keep wanting to put their money in the same place. I think that's what's crazy.
Yeah, you need to learn about how money works a little better than that. You need to not just bang your head against the wall and think the next time you bang your head on the wall it's going to be any better than the first time. You're just explaining the whole concept that if you do the same thing over and over, results, you're just not going to get it. You have to be aware of your surroundings and do what's necessary to protect yourself financially, because the Federal Reserve and the central bank cartel across the world, they're not there to help you out with your situation. I mean, they literally out loud in the last year plus said they want to kill jobs to fix inflation. So is that watching out for the average guy listening to the radio show? I don't think so, Joe.
Well, I'm going to tell you right now, the economic data today, not good. We've been waiting on jobs. We've been questioning. Of course, the jobs number that we got last week, everybody was like, what? How? How did we create 253,000 jobs? Well, it turns out death model said 380,000 jobs created. Well, if you do that, that actually meant, hey, we proved negative jobs, but jobless claims today. So remember, we've been talking. I said, listen, it's been getting close to that 250 to 270, 250,000 to 270,000 jobless claims a week. That's the warning zone, right? That's kind of that Will Robinson warning, right? That's the warning zone. Now, we haven't gotten there, right? We've been in the 240, 230s, 240s. We got there today. 264,000 first-time jobless claims. This is the biggest number in quite a while. Now, it's only 1 week. But Jason, we've been stair-stepping up on jobless claims. Remember, they were below 200,000. Then they got in, that 200 to 225,000. Then it got to, that 225 to 245,000. And now this week, 264,000. The problem is once you get above that 270, that 270 to 300,000, right? Jason, that's more than a warning.
Yeah, that's right. And sometimes I gloss over that number just because I remember checking it during coronavirus, and it was 600,000 or more for, 2 years or something like that, Joe. So you hear 270 or 260, and you think, that ain't that bad. But traditionally, over a normal span, that's getting to be a big number, Joe.
Yeah, so we had problems at PacWest Bank. Jobless claims come out way hotter than expected. They're expecting about 245,000, so much higher than expected there. Then we heard from Best Buy, not good. Already saying, hey, we expect a 10% decline in sales in 2023. But then they said, by the way, it could be another 10% decline in 2024. I'm just going to listen. I don't know. I'm going to make an educated guess here. I think Best Buy, by the time the end of 2023 gets here, I wouldn't be surprised if sales were already down 20% or more. Patriot Radio News Hour. Joe and Jason coming right back. (800-951-0592). Joe and Jason, Patriot Radio News Hour on this Thursday. Quick look into the markets. The Dow is down just under 300 points. The S&P is down 15. The Nasdaq's down 3. Gold's off 10 right now, 2027. Silver has the one that's been taking a big hit. Silver, copper, some of the industrial metals taking a step back today as Wall Street's starting to get nervous. Not there yet. Like I said, it's only 1 week. We'll have to wait and see if this is the pattern here. But Jason, I actually lowered silver prices on also. Jug silver's lower today. Silver Eagles are lower today. Cases of Silver Eagles are lower today. But again, if you are looking at, hey, I'm getting my gold and silver. I'm getting my money out of the bank. I'm trying to find other opportunities that aren't Wall Street, right? I've called Joey. Don't forget why refi. Listen, you can get up to 10.25% return. Some of you may be like, hey, you know what? I just want to take a 1-year timeout. Maybe I want to take a 1-year timeout. Maybe I've got an IRA with a couple $100,000 in it, 500,000. Maybe it's $1 million. I don't know. Maybe you got $200,000 sitting in the bank. You want to take a 1-year timeout. Just to tell you, I just need a timeout. I don't like what I'm seeing here. I don't want to do anything rash, but I want to take a 1-year timeout. You'll get 6.25% return. Fixed. That's better than any money market. That's better than a lot of things. Just for 1 year. If you want to go 5 years, I'll give you 10.25. Check them out. InvestYRefi.com. The word invest, the letter Y, REFY.com. Or just give them a call. 888-YREFI24. 888-YREFI24. Remember, the only caveat here, you got to have at least $50,000. That's the minimum to let you in, but check them out. It's another great way to diversify what's happening. And think about, when we talk about Stan Druckenmiller yesterday. I mean, when he comes out, you need to pay attention. But he's talking about, I don't see the stock market higher 10 years from today. And this is something Jason and I have talked about. when you really go back, and this is kind of part of the problem with a lot of what we have seen over the last 30 or 40 years. Like when I started the show, people have been brainwashed almost like, no, you just got to keep putting the money in there, right? Just keep putting it in there. It's going to be fine. Well, that's when we lived in the debt-laden world of the central bank. And we've kind of gotten there, haven't we, Jason? We've gotten to that point because everybody always wonders, well, how much debt, right, can we really go into before it starts causing a problem? Right? What is that number? And none of us really knew what that number was. But we kind of know now, don't we? Right? Because we're seeing, right, the rest of the world de-dollarizing, saying, hey, you know what? I'm going to hold something other than dollars. How about central bank gold buying? We've actually set a record for the first quarter. So think about last year, we set a record for most gold bought by central banks ever. So far in the first quarter, the central banks bought more gold in the first quarter of 2023 than they ever had in any first quarter. And you think about it, gold's been on a tear, Jason. They've actually been buying in despite the fact that gold continues to rise. But I think it's just an indication, a very strong one, that the game has changed now. Hey, you know what? You guys got a lot of debt now. And all of a sudden, all of these cracks are appearing, right? We're not even in a recession, and we got banks failing. Commercial real estate, man, it just doesn't look good. Citigroup today, commercial real estate values in Europe are expected to plunge 40%. This is big. This is, you think about what's happening here, right? Depending on, and again, think about this. San Francisco, New York, Chicago, Houston, Dallas, even places like L.A. and San Diego are all struggling. You're talking about buildings going for 25 cents on the dollar, 20 cents on the dollar. Heck, one of them went for 12 cents on the dollar. And Jason, it's kind of simple when you talk about, hey, I've got a new building, brand new, and then I've got this other building that's 40 years old. We don't have enough people to fill both buildings. Well, which one's going to get rented and which one isn't? And the answer is right pretty simple. Everyone's going to, I want to be in the new building. Well, what does it make the old building worth? And the realities are, Jason, they're talking about it's almost worth nothing. And this is a big, big problem for all of the banks. And now you throw Europe into the mix as well. Jason, there's a lot of stress coming. When they talk about more bodies coming, this is what they're talking about.
I think there's going to be extreme stress coming because the thing that stuck out that you said just now is these banks are closing and there's not even a full-blown recession yet, right? And the Great Recession, that's what they called it, the Great Recession. If you look at bank closures, I was talking to Joe briefly a couple of times recently. I think there's going to be 700 bank closures in the next 4 years, Joe. That's what I think. I actually, when the Fed released that information that there's 722 banks that had lost over 50% of their assets value, and that was at the end of quarter 3 of last year. And then I look at the chart. Anybody can look this up. I just did bank closures by year, and then I clicked images on a Google search, and you get the FDIC's numbers. In 2005 and 6, there were 0 bank closures. If you look at where we're at now in 2021 and 2022, there were 0 bank closures. But then 2007 is 3, and then what you have is 25, 140, 157, 92, 51, and 24. You get about 525 bank closures in about a 4 or 5 year period. We're mimicking that. I'll tell you that's one thing that's going to be a lot like that economic time, Joe, is I think the bank closures are going to be like that. And you said about the stock market, you talk about how people just keep pumping their money in. what's going to happen is they're looking for a reset of the currency. This is why the digital currency is coming in. And if you're in the wrong stocks, which namely is going to be small companies that are going to go out of business the same as these banks, you're going to lose. If your 401k is leveraged in small, medium, and large stocks, how many of those small and medium stocks, Joe, those companies are just going to be obliterated now. And that's going to not be good for your 401k. It's not going to be good for whatever stock portfolio you have. If you're, everyone says you got to diversify. They say, I see you guys, you got to diversify in your stocks. Yeah, but if you don't know what these stocks are and you don't really research every single company you're in, you're going to lose on a bunch of them. Because, Joe, economically, everyone's going to be losing here in the next few years. So just why I really think we're going to have a lot of bank closures. This year's going to be the lowest of the next 4 or 5 years. So I see the next few years as being dramatically stressful for the banks.
Yeah, and a lot of these banks, close may be the wrong word. They're going to get gobbled up, right? They're going to be miraculously merged into these other big banks, But again, even today, look, I told you the Nasdaq's only down 3 points. There's 153 stocks just on the Nasdaq that hit new 52-week lows today. Right now, almost every day, for every one stock that's hitting a 52-week high, there's, depending on the day, 4 to 8 stocks hitting a new 52-week low. So let's just call it about 1 in 6. So for every one stock hitting a 52-week high, there's 6 of them hitting a 52-week low. And yet, really we're barely hanging on, but we're still at 33,000. I mean, right? It's kind of like right where we've been for a while. The thing is, and again, you go another couple of weeks with 260, 270, heaven forbid more than that, first-time jobless claims. Look at what Best Buy said today. Tuesday morning, gone. Jenny Craig, gone. Bed Bath & Beyond, gone. Is Best Buy gone? No. But are they going to close stores? Yup. Right? I mean, we're starting to see exactly what we didn't want to see here. And when you have a market like this, where there's just a few stocks doing all the hard work, it usually sets up for those waves down. That's what happened, when Dow was 37,000. Went all the way down. I mean, what did it bottom out at? About 30? Right? Then kind of bounced off and has been hanging out around this 33,000. I don't think it hangs on to 30. I think we're going to see a Dow in the 20s. And it's not even that's not even a big call, right? Because when we look at what's inside of this, things don't look so good, and it looks like there's going to be more margin pressure coming. These PE ratios are going to have to come down, and even if they don't come down, the earnings are going down, and that's just the reality of it.
Yeah, Joe, kind of like the housing market, I think is going to go sideways. The stock market going sideways the last 2+ years, going towards 3 years. I think the best that the stock market can hope for is to go sideways. That's the best. And while the inflation still keeps on going, anything that goes sideways with big inflation means you're losing. That's all there is to it. And I don't know how low the stock market will go, Joe. Like I said, inflation muddies the water so much. But let's say the stock market goes to, 28. And it takes place over the next 10 years. Let's go with your guy saying 10 years. Let's just say for the next 10 years, it just bounces between 33 and 26 or 24, right? It doesn't really crash and go down, but it goes sideways. And it just seems to me that inflation could be severe for years. If you have, let's just say 4% inflation that they just can't quite conquer, and it goes for 10 years, and your stocks stay the same or goes down, let's say 10, 15%, that's an awful place to park your money, Joe. You need to have it somewhere else. You're being ripped up by having those kinds of situations, Joe.
Yeah, and it's going to be interesting to see here. I'm worried because Jay Powell seems to think that they can somehow just lose a couple million jobs. that's never happened. I mean, listen, if they had all kinds of track records to show, well, see, look at what happened here, and it doesn't. And especially when you raise 500 basis points, is what they've done. Jason, there's nothing in our history that says you can pull this off. And you got to remember, the more debt we have going in, the harder it is to pull anything off, right? So in other words, the more debt you have going in, usually the more pain you have to suffer from any type of policy mistakes. And this is kind of what we're dealing with here. And this is why I said, it's happening a little, like a slow motion car wreck, right? You're just like, you're seeing it happen right before your eyes, and everything seems to be going super slow. It's not. Listen, it's May. We went from 180,000 jobless claims to start the year. We're now at 264. What are we going to do if it hits 364, right? I mean, this is happening a lot faster than you think. Patriot Radio News Hour. We'll be back after the break.